Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. This is our week in review. Thanks for joining me, everybody. Lot to discuss. Let's remember the ARMR Report stands for Algorithmic Risk Management Research. So we start and end all of our decisions when it comes to buying a stock or selling a stock based on risk management first, capture upside second. It's a three-stage process, the ARMR Investing Way. We build our whiteboard, talk about fundamental ideas. We're going to share today stocks that are at the top of our whiteboard, or what we call top shelf names, that we're looking to buy in the coming weeks. Then we look at our second stage of our process is looking at algorithms, right? So we're going to break down today, look at the algorithms for our big indexes that drive our big risk decisions from 30,000 feet. And then we'll dive down into group ETF algos and then individual stock setups. And then, of course, the third stage that wraps it all together, puts a bow on it, is sound stop loss disciplines, right? It protects us from ourselves. It stops us from guessing what's going to happen next and just executing. If you put those three pieces together, this three-step process, it should make investing easier to execute and simpler to understand. You can get rid of all the noise you hear around you and just execute the process. And over time, net worth will follow, right? So basically three major areas of the ARMR report: model portfolios, exclusive videos, whiteboard, which is where we talk about our fundamental research, and the risk monitor, which we monitor. That's what we use to monitor our top 8 algorithms telling us the direction of the market. So let's start there and drill down. I always like to start first by looking at the big indexes, okay? So Nasdaq 100. And this is the big question, and I posted a couple of thoughts up there in the comment section of what people are saying about the market, some of these questions, right? Supposedly, money managers are 100% invested and they're on margin. And, you know, supposedly total percentage of bulls dropped 20% last week while the market was consolidating. This is an example of the type of information that won't make us a penny. It won't protect us. It won't make us any money. All it will do will be to make us run from pillar to post. Because right after those two pieces of information, I can share with you that there's massive U.S. equity inflows that have been coming into the market at a time that's not normal, looking back through history. So what happens when you read all these statistics is that, you know, number one, you just get confused and you get sick and tired of it and you just say, forget it, I'm not going to do this. Or number two, you'll pick out the statistics that fit your own thinking and make you more and more sure of your own thinking. Like you'll avoid the stuff that you really should be paying attention to, which is helping you balance your thinking. And you'll just, oh yeah, if you're a bullish investor, you'll just point to all the equity inflows, market's going to go through the roof, right? So all of that stuff is noise, and I just put it over here and I don't pay any attention to it. The ARMR Investing Way is a three-stage process. Build our whiteboard, look at algorithms to tell us when to put money to work. Algos don't care about all the ridiculous news stories, some of which are true, some aren't true. Everyone's got an axe to grind. Everything you read in the paper, I mean, I hope I don't sound too much like, you know, a cynic here, but let me take you to one of my favorite parts of the ARMR report. And it's something I've been building for a long time, and I'm sharing it with ARMR insiders, but I really want to share this with my son and my daughter when they're ready to start managing their own money. And so I call this investing rules of the road. Okay. And I'm just putting together this list of things I've learned over the years. And as an ARMR insider, you have access to all this. And one of the things on the list, let's see if I can find it. This is something my dad always taught me. Rule number 5, believe nothing of what you hear/read and only half of what you see. Believe nothing of what you hear and only half of what you see. That's not cynic. That's just reality. That's life. So before you read too many things from a brokerage firm meant to get you to do something, realize they have an axe to grind. So this is why I've created the ARMR Investing Way. For me, I couldn't stand all that. And after a while, I realized it doesn't get me anywhere. So all I care about, all that really matters to me are algorithms from a big standpoint, because all they do is follow fund flows. And of course, there's thousands of lines of code. So there's many things that they do. But what we like to say here is price is king. Price is king. The price action's king. Everything else is noise. Everything else is the jester. Okay? So could this be a double top on the Nasdaq 100 and the market implodes? It could. And I'm not going to even begin to come out here and tell you what I think is going to happen next week. I don't know what's going to happen next week. What I can tell you is we are long and strong the market until such time as our stops are hit and we have to go back to cash. We got long the market right here at the 50-day moving average on this break, right? As it broke out. So we got long in here. Our index only portfolio is 142%, 143% long the market. And by the way, we're not using margin. We're just using ETFs that are twice the performance of the S&P and twice the performance of the Nasdaq. And then we fill out the rest of the portfolio with our other indexes that we monitor, okay? So it gives us exposure. We actually have 5% cash in the portfolio, but the way we do it, it gives us more than 100% exposure to volatility, okay? So should this break down from the double top and break back below the 50-day, chances are the algos will get stopped out and we'll go back to cash. And that's the way it'll go, okay? It happens. Not every year is a year like last year. But right now, what I like to say is the trend is your friend. You guys have heard that before. And everything else you know out there is just noise. The trend is your friend. All that noise out there is designed to get you off the bus. Volatility is out there to get you off the bus, and then the market rips higher. All right, so our job, step one, what are the big indexes doing? What are the algorithms saying? So far, the algos are saying we're still long the market, and there's no reason not to be long the market. We're in this Andrews Fork uptrend this whole way. Now, I'll tell you what's frustrating for me. And I try to keep it real on these Saturday conversations with you and on every conversation. And we have exclusive videos for ARMR Insiders, 8:30 in the morning and 2:30 in the afternoon. The morning meeting, the in-game update, okay? All ARMR Insiders have access to that. And I just try to keep it honest and real, okay? There's no... The whole reason why I started the ARMR Report and I talk to you guys, and I appreciate you're here listening to me because it helps me order my own thinking and put money to work. I started this 3 years ago. I didn't have a website. I was just doing videos because it helped me order my thinking and keep myself on the right track. So you guys are just as important in this equation because you really helped me out, and I appreciate it. Now, not to mention the fact that you guys have given me some phenomenal trading ideas. I think last week, and I want to call the guy out, I don't know who it was, one of you said we should be looking at CRISPR. And I made a killing on CRISPR last week, so thanks for that call. All right, so I digress. To get back to my conversation here, it's been a bit of a struggle in the swing and the invest portfolios, trying to find the right group, because what's really happening this year, it's really interesting. This year is a year where the indexes are grinding higher, but this totally belies what's going on underneath. Okay, and what's going on underneath are some unbelievable implosions in some of our favorite stocks from last year. I think Teladoc's one of the greatest ideas in the world. The stock's getting destroyed. And that's just one example, and there are so many. I'm not going to go out there and share them all, but I mean, I'll just throw in another one, right? I mean, this stock's just been down all year. So if you're investing in things like Zoom, you're having a terrible year. If you have your assets in the S&P, you're killing it. And this is an awful type of a year for a guy trying to create alpha, because the indexes are just grinding higher. And the only real alpha is to have more than 100% exposure to the indexes. All right, the Dow doesn't show any signs of a sell-off or a top. There's nothing there that would make you concerned. How about the value index? Looks like it's about to break out again of a tight pattern. Okay. And of course, we've got the innovator funds, and that's where the weakness is. So we're trying to put a bottom in here, and it doesn't quite seem to be able to do it. All right. So let's get back to our thought process. Step one, big indexes are still long. Algos haven't changed. Check mark. We're in a bull market. The trend is our friend. The rest is noise. If we get stopped out, then we change our approach.